Okay, welcome to the second episode of the AMT podcast, and we have a lot to talk about today. As promised last time, I'd be explaining what exactly the gaming space is in crypto. We'll review last week's main event at UFC 270, and I'll also be summarizing my last week's trading. So before we get started, I just want to thank the first episode listeners, especially those who left feedback. I really appreciate it, and I encourage everyone who listens to do so, whether it's here on the video or if you want to send me a DM or email. Just any brief pointer on anything that needs improving with regards to production, because that way it really helps me to fine-tune things. One listener mentioned the volume was low on the first episode, so I've cranked up the volume this time, so hopefully no issues there. I'm still learning on the job. Also, I'll possibly bring on a few friends in the coming episodes to talk about sports, so we're getting experimental with things. It brings a new dynamic to the channel, and we're just seeing what works and having fun with it. Okay, so let's jump straight into it, and we'll start with the hot topic of the week, crypto. Even if you're not involved in this space, it's been pretty hard to ignore what's happened, as it's been absolute carnage. It's been blood red. It's been a bloodbath, and people are losing their minds. Some of the meltdowns have been pretty spectacular. Bitcoin's hit as low as $33,000, I believe, which is less than half of what it was 2 months ago. And it was only back then when everyone was screaming, crypto's back, we're going to the moon, we're going to 100K, we're going to 200K, we're all going to make it. Now suddenly the music stopped, and I've seen so many people backtrack and make excuses and change their minds, anything they can do to cover their tracks. And at this point, it points to an important lesson, which I hope everybody has learned, which is to not ever base your investment decisions on these flimsy influencers who know nothing about the crypto market. They just joined in for the ride and brought their followers on board with them, thinking they're all going to get rich and sail off into the sunset on DJ Island. Now, I'm sure a lot of my listeners know who KSI is, the YouTuber / boxer / MC / podcaster / crypto expert all of a sudden. This guy was calling the tops, calling the bottoms, buy now, sell here. Long story short, he just uploaded a video on YouTube where he's explained how he's lost $5 million. He's lost $5 million in a bull market. And this guy has millions upon millions of followers who listen to him, and he's created a separate Twitter page dedicated just to his crypto trading and has over 300,000 followers on there, which is a lot more than most crypto experts. Now he's claiming the Ponzi scheme's over. Bitcoin has to die. Sell, sell, sell. And it's so sad because he's so influential. He's leading a lot of people astray, and he has absolutely no idea what he's talking about or what he's doing. This guy's opinion changes with the wind. It was only a few months ago where he's saying, we're going to the moon. We're going to make it. Buy now, buy now. This is the bottom. Now he's saying Bitcoin has to die. Sell, sell, sell. And by the way, I like KSI. I think he's a great guy. He's genuinely funny. And he's done very well for himself. But for God's sake, leave crypto alone. Invest in it by all means. But don't scream on Twitter. Don't scream on Twitter to all your followers when to buy or when to sell when you have no idea what you're doing. Same with that other guy. What's his name? David Portnoy, the CEO of Barstool Sports. I'm sure a lot of you guys know who he is. This guy is stinking rich, much richer than KSI. I'm talking like 100 mil. This guy really has that FU money. And I remember when he bought Bitcoin, he would flip-flop every day whenever the price moved. One day it was, we're going to the moon. Next day he'll upload a video saying, I'm done with Bitcoin. The next bunch is the buy the dip fanatics. And I can't figure out who's worse. Whenever there is the remotest correction in price, these guys are screaming, buy the dip. And you have to wonder if these guys are actually buying the dip, since there's been like a dozen price corrections since last Easter. And they never seem to run out of cash. Now, these buy the dip guys, they also have no idea what they're doing. They're just trying to recoup their losses by revenge trading. They have no interest in Bitcoin as a project and just thought they could ride the wave. Now, they think the music has stopped as well, and they're either panic selling or just doubling down in a losing position, which as a trader is one of the biggest crimes. There's so many egomaniacs in this space who would rather make excuses cover their tracks and pretend they know what they're doing rather than just simply saying, I don't know. People will respect you a lot more if you just admit you don't know. Nobody's perfect. No one has a crystal ball. No one can call the tops or bottoms, especially in an unregulated market like crypto where the swings are wild. If you're going to invest in something, and I've always said this, do your own homework, make your own investment decisions. And if you are going to listen to others, for God's sake, don't listen to guys who play FIFA for a living. Listen to the guys who know what they're talking about, who've read the white paper, who can explain in dummy terms what crypto and blockchain is, and most importantly, don't have paper hands. Like me. Just kidding. I'm an absolute degen. I'll bet on anything with more than £500 liquidity. As I did this week, punting on US racing without looking at the pictures. I'm just kidding. Or am I? That's a video for another day. Anyway, so some of the guys that I think are very knowledgeable in this space that I listen to are guys like Max Kaiser, Jeff Berwick, the Winklevoss brothers. Now, Jeff, I don't know if he's on YouTube anymore. But the Winklevoss brothers, Max Kaiser, Michael Saylor, these are guys who are multi-millionaires, billionaires even, who not only believe in Bitcoin as a technology in the long run, they do regular interviews and seminars discussing blockchain technology as a whole, and rarely, if ever, talk about short-term movements in price since they're long-term focused. So having said all that, if you've done your homework and have concluded that what you're investing in is a worthwhile project in the long run, these price corrections will stop scaring you, and you'll in fact see them as an opportunity to dollar cost average your entry into a lower position, and not to a revenge trade. You take any big stock, any blue chip company, and you look at their price history. Netflix, Microsoft, Berkshire Hathaway. There were many ugly times along the way, a lot of bumps in the road. But if you believed in the company you were investing in, you would have used these opportunities to increase your position. Warren Buffett, the greatest investor of our time, said he never sells. Because once he's decided that he's going to invest in a company, if it's a sound business, there's never a reason to sell. And when there are price corrections, it's time to go shopping. If the price of something goes down and you truly have done your homework and you believe in the project, you should be excited. And if the price goes up, you should be absolutely level-headed and unemotional. What you must understand, and I hope this episode has taught you, that people who never get rich are always upset when prices go down because they're near-term focused. People who are rich or who are at least looking to get rich are long-term focused. The aim of the game is to accumulate assets. Guys, trading and investing are two very different things. I invest in Bitcoin for the long run. I've made the mistake of trading Bitcoin's short-term price movements and I got slaughtered. I'll talk about that in a future video. But if you listen to these YouTuber influencer guys who don't know if they're traders or investors who change their mind on a whim. Bitcoin, today market's down, sell everything. Going all in on Ethereum. Oh no, Elon Musk tweeted, buy Doge. If that's your strategy, I don't need to tell you what's going to happen. So that's enough on Bitcoin. One final thing I want to point out during this sell-off is the amount of altcoins that have simply been found out to be Ponzi schemes. I'm not going to name any projects, but a lot of these projects have been hit so bad that even if they're recovered by 50%, they'll still be massively down. And for those wondering why and how these fake projects collapse, it's because there's usually one or a handful of big wallets or whales who hold the majority of the coins in that project. So when they do sell, they cause a massive movement and it's just a race to the exit door after that as people are just jumping in front of each other. Okay, now on to gaming crypto. So I promised I'd talk about this last time. And I'll do my best to explain this as simply as possible. This is an industry which I think is going to explode in the future. I think we're going to see 100x gains. I think that that's very obtainable. I think it's a place where you're going to get the greatest return on investment. And it's potentially going to lead to cartoon-like valuations, much like that of the dot-com bubble. So I'm going to do my best to explain this in dummy terms. So I'll give this a shot. So what is crypto gaming? So traditionally, games are centralized, meaning your whole experience and all the items you own while playing belong exclusively to that game. For example, you play Grand Theft Auto, you buy a penthouse or guns, or when you play FIFA Ultimate Team and you spend money buying players, or when you play Fortnite and you purchase skins, or World of Warcraft when you're purchasing armor and swords. All these items and things you own belong exclusively to that game. The data is stored inside the system. As soon as you turn off your PlayStation or Xbox, everything you own stays in that game. Now you can probably see where I'm going with this, because in crypto gaming, you can actually own items outside of the game, which you can trade for profit on a marketplace like OpenSea. And this has been made possible through the use of NFTs, which stands for non-fungible tokens. NFTs are a non-interchangeable unit of data stored on the blockchain. In plain English, that means NFTs provide public digital certificate of ownership, which everyone can see. You can see on the blockchain who owns what. This can be applied to almost anything: music, videos, games, pictures, and they give individuals power of ownership. Now, I know what you're thinking. What's to stop me from taking a screenshot of a picture and using it as my DP? And that's a great question, to which the answer is there's nothing to stop you from doing so. However, your copy is worthless, and the underlying original asset has value since the owner has digital proof. So NFTs essentially create digital scarcity. The same way there's only 21 million Bitcoins will ever exist. Only X amount of a certain amount of picture will ever exist digitally. So once a creator has decided what they want to mint, whether that be a picture or a video or a tweet, they decide how many copies they want to create and then set a price depending on the market and release it for sale on a market like OpenSea, which is currently the biggest market for NFTs right now. That's why I'm going to keep referencing it. Let me give you an example. Jack Dorsey, the CEO of Twitter, he decided to mint his first ever tweet. So he turned his first tweet into an NFT, and it sold for $2.9 million. Someone essentially paid nearly $3 million just to own his first tweet digitally. There's a famous Hong Kong filmmaker whose name I can't pronounce, but he turned never seen before footage of one of his movies into an NFT, which he auctioned off. Major sports franchises like the NBA and the UFC, they're now minting moments in their respective sport. Let's say a Kobe Bryant slam dunk, or a Conor McGregor knocking out Eddie Alvarez. They'll mint X amount depending on how rare and valuable they want them to be, and release them in a drop that you have to queue up for online. Once you own these moments, you can then trade them. This is a growing market where people are making a lot of money, and it's just a matter of time before, say, the Premier League jump on the bandwagon. So imagine the Premier League release a moment where, say, Jadon Sancho scores the winning goal in the final match of the season to secure the Premier League, and the FA decide to mint 500 of these moments, and you're lucky enough to get hold of one via the drop or a competition draw, and then you sit on it, and Jadon Sancho goes on to become a Premier League legend in the next 5 to 10 years' time. It's going to absolutely skyrocket in value. So before, people would trade physical cards like baseball cards, Pokemon cards, and Yu-Gi-Oh cards, and if you had the foresight to know how much they'd be worth today, and you kept them in good condition, they could be worth hundreds of thousands or millions of dollars. Now we can trade digital cards or moments whose value is derived by digital scarcity. So how does this apply to games? So back to the example I gave before where I said only 21 million Bitcoins will ever exist. In gaming terms, let's say a developer creates only 50 golden swords, and they're going to mint 50 golden swords. Only 50 golden swords will ever exist. Okay? And they release these swords via a drop or a competition once again. And let's say you're lucky enough to win one. Now you own that golden sword, and it's stored in your Ethereum wallet address. And you can prove it. You can see it on the blockchain. Now let's say a gaming developer wants to incorporate that item into their game. Now you can use that golden sword as in your inventory in that game. There's a common myth going around that with gaming NFTs, once you own an item, you can use it across any gaming platform. Now that's partially true, but it depends because the programming language is different for every game. So let's say this golden sword example, you can't use that in a football game, can you? But if the gaming developer lets you turn that golden sword in, let's say into an emblem which you can put on your shirt, then it's possible, but you can't actually use the sword in another game, if that makes sense. But sometimes you can use items across different platforms. So for example, gaming blockchain developer Engine, they decided to create a axe. I think it was an axe. And you could purchase this via a drop or a competition. So if you got one, you could actually go and use it in another game called Forgotten Artifacts, who decided to incorporate that axe. The same company, Engine, they decided to recreate the wooden sword from Minecraft, which you could also use in Forgotten Artifacts as it's stored in your inventory. Or if you wanted to sell it on the OpenSea market space, you could do so. So that's the power of NFT gaming. Or if you look at the Metaverse, 3D virtual reality games, you can now purchase virtual real estate whose value depends on real life factors like location. There's 2 established metaverses right now, Sandbox and Decentraland, both of which I've invested in, by the way. And there's regular drops that you can queue up for to buy virtual plots of land. So imagine you buy some real estate on a plot of land in Decentraland. Let's say you buy a penthouse for, let's say, $1,000, and a bunch of transport links or buildings are being built around your penthouse, which is possible, by the way. You can actually build in these 3D virtual realities if you're an advanced coder. And coding is going to be one of the most sought after skills in the future. It's probably going to be one of the surefire ways to be a millionaire in the future. But that's a video for another day. Like I was saying, if you buy a virtual penthouse in the metaverse for $1,000, and Logan Paul one day calls you and says he wants your penthouse and he'll pay you $5 million for it, this stuff is happening, guys. Snoop Dogg bought a piece of virtual real estate in Decentraland, and somebody paid $450,000 for land next to his just so they could be his neighbor in the metaverse, in the virtual reality. You can also buy stadiums. You can buy stadiums and you can lease them for concerts and collect money via the concert tickets, where everyone has their VR headsets on and they're tuning into the concert, and you can make money like that. This is no joke, guys. It's crazy. People are going to be so vested into VR and to the virtual reality. We're in the baby stages right now. Now, granted, the NFT space has really overheated in 2021. NFTs in the metaverse have been around for a few years, but with the explosion of NFT artwork, which really took off in 2021, a lot of people have caught wind of what's happening in this space. So everyone's trying to jump on board now. Other games that offer this play-to-earn like model is Axie Infinity, where users can buy characters called Axies, build them up, level them up, and sell them off at a higher price. They can also battle other Axies to earn Ethereum-based gaming tokens, which can be exchanged for real-life currency. So this play-to-earn element to gaming is an absolute game changer. And it's the main reason why I'm so confident that this sector is going to explode. Think about the hundreds of hours people spend on World of Warcraft to earn a Yellow Dragon or Football Manager, taking a team from League 2 to Champions League. And then for all your hard work, your data is stored in the game and it doesn't belong to you and you can't monetize it. Now, people have actual ownership, provable digital ownership of their virtual assets, and they can convert their virtual earned currency to real life currency. So is it the right time to invest? Look, by now you should know that trying to call the top or bottom in a market this early is highly speculative. But I don't believe you should ever try and time the market. And unless you're a trader, of course, I don't believe you should try and time the market. If you believe in a project long term, you should instead look at dollar cost averaging your way in. So if you buy today and it goes down in price, buy more to lower your entry, but do your own homework first. So I hope that's helped you to understand what gaming crypto is about. I've done my best to explain it as simply as I can. I'm shooting, straight from the hip here, just shooting straight off the bat. I haven't written anything down, but I'm going to talk about this more in future episodes. So hopefully you guys get a better idea of what I'm talking about. The most important thing is no matter what sector you're investing in, just make sure that you only have one niche or two niches. And I speak about this. It's the same with sports trading. If you're trying to trade 10 different sports, you're not going to make any money. One day I'm trading tennis. Next day I'm trading American football. Next day I'm trading snooker. Then it's cricket. Then it's racing. Unless you've got a team of guys, you can't have more than one or two niches. It's just impossible. Same goes for crypto. You can't focus on DeFi and then stable coins and then meme coins and then gaming coins. You're just not going to get anywhere. You just need one or two niches. And the reason why I've picked gaming is because this is one niche which it has no choice but to explode. For so long have we waited to bet on games, to monetize playing games, and now we're actually here. We can actually monetize playing games. Guys, just run the numbers. There's over 1 billion gamers in the world. There's only, at the time of recording this, there's around 100,000 wallets on OpenSea. 100,000 wallets on OpenSea and over 1 billion gamers in the world. That's not even 0.1% of the market are actively trading NFTs in the gaming space. Not even 0.1%. Run the numbers. In the next 5 to 10 years, 100x minimum is where we could be heading. And when you talk about things like Bitcoin or Ethereum, we're possibly decades away before that has any real life utility. You can't go to a petrol station or a bar or a restaurant and pay your bill with Bitcoin or Ethereum. We're probably decades away from that. But play to earn in the gaming space is happening now. We have over 1 billion gamers. So this is a sector where I think is going to explode, like I said. So this is a sector which I'm going to focus on. I have no problem with DeFi and stablecoins and blah, 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 that and the other. But it's boring, and it's just, like I said, we're so far away from it being applicable. So that's why I'll be focusing on gaming crypto. Anyway, that's enough on that. Now on to sport. And we'll start with UFC 270. Whew, what a fight. I almost called it to a T. I got everything right other than picking the actual winner. It went 5 rounds. It went to the judges. It was low impact, high drama fight. Kind of like the Wilder Fury fight, like I said it would be. And the fans whose reactions I also predicted was pretty much exactly what I expected. They were booing, they were jeering because, like I said in the last episode, fans don't care about a great individual performance as much as they care about a great fight, which this was not. Far from boring, but it was highly technical. Cyril Gane, he's a calculated stand-up striker who doesn't stay in the pocket and trade with his opponents, least of all with an absolute monster like Ngannou, who just has to graze you with a punch. He doesn't even have to hit you clean to knock you spark out. And fans who pay to go and watch, it's like, what else did they expect? That's one thing that baffles me about sports fans. If you know you're going to pay to watch a guy who doesn't engage, why get mad when he does what you know he's going to do? It's beyond me. Fans just want blood, which is so ironic because when fighters do get injured and do sustain life-threatening injuries, these are the first people to complain to the board about refereeing and complain about the fighter's welfare not being taken care of and blah, blah, blah. Funny thing is, the two guys that stand in front of each other and slug it out and can't get out the way of each other's punches are inept. That's all it means. The art of fighting is to hit and not get hit. This isn't street fighting. Anyway, ran over. But I enjoyed the fight, and I was really impressed with Ngannou's improvements in his ring generalship and his ground game. Took him a couple of rounds to figure out he's not going to outstrike this guy. He's too elusive. Let's take it to the ground, which he did in round 3 with that beautiful body slam. And from there on, it was clear that Gane had no idea what to do on the ground. If Gane is to come back and ever become heavyweight champion, he needs to significantly improve his ground game. Otherwise, his career does risk going down the same way as, say, Stephen Thompson, a likable guy, a high-level kickboxing technician whose opponents know they just got to get him to the ground and it's over. This isn't to take anything away from Ngannou, by the way. Like I said, he's constantly proving why he's number one and why it's likely he's going to stay there for a long time. I really underestimated how much he could change, but he just seems to be getting better with every fight, which is unusual for a guy so late in his career. It's usually hard for a guy to change his old habits. Maybe he'll get found out against a real wrestler and grappler like John Jones if that fight ever happens, but we'll have to see. One thing I do hope is that Ngannou doesn't get carried away and think he has any chance hanging with real boxers. He recently had a back and forth spat with Tyson Fury on Twitter, potentially flirting with the idea of a boxing match, and you can hardly blame him. The money in boxing is astronomically higher than the UFC. Anthony Joshua, Deontay Wilder, Tyson Fury, these guys don't get out of bed for at least 20 million. That's 3 guys, 3 heavyweight world champions, all making 8-figure paydays per fight. Whereas the best heavyweight MMA fighters in the world are making 500K to $1 million. Anthony Joshua just got paid £15 million to step aside so Usyk and Fury could fight. £15 million to not fight. Whereas the best MMA guys in the heavyweight division are getting paid 500K to $1 million. It's a different ballgame. Now you can argue it's unfair, but unfortunately, unless there's a franchise other than the UFC willing to come along and put up more money, it's not going to be happening anytime soon. There's literally only 2 franchises, Bellator and UFC. UFC obviously being the biggest. They've got like a death grip on the whole industry, and it's really fun watching Jake Paul stick it to them. I think Dana White, he's offered the chance for Jake Paul to fight Jorge Masvidal. And Jake Paul really turned the tables. He said, look, if you promise to pay your fighters minimum $50,000, medical expenses paid for, I'll do the fight. He'll do the fight. I think he's even bought in shares in the parent company of the UFC. You can call him a troll. You know, he gets a lot of hate, a lot of jealousy, some of it understandable. But the truth is, I mean, the guy's raising the profile of the sport. He really cares about how much athletes get paid. So good luck to him if he makes things happen. Anyway, on to the golf. Made some money on the golf in Abu Dhabi last week. Great win for Thomas Pieters. Such a composed player. And it was nice seeing his fellow Belgian compatriot, Thomas Detry, root for him and stay at the end to watch him play. Thomas Detry is a guy, actually, I saw him in Dubai when I was there last month. When I was practicing at the Els Club, he was practicing next to me. And you watch this guy play and you think, how was he not won? I think he was off like +6 or something stupid when he turned pro. This guy is always top 30. And I guess when you're collecting $50,000 to $100,000 checks every week, it's kind of, for some players, it's just hard to get hungry, to go to that next level. Which I think is sad when you're that talented. I mean, when I saw him hit the ball, it's just unbelievable. It just makes a different sound. But I made some money off Pieters. I backed him at 1.8. And whenever you back a player in golf, you have to anticipate there's going to be volatility. That's the nature of golf, especially if you're backing a guy who's outside the top 20. Now, like I said last time, I don't back anyone till the 4th round. The first 3 rounds are just kind of putting pieces of the puzzle together. And it doesn't make sense to back anyone, no matter what anyone says. There's guys you keep an eye on, but it doesn't make sense to back any individual at the start because there's just so many variables involved. Betting on golf is a bit like test cricket in that sense. There's so much movement in the price that even if you are right, you could have made so many small trades in the meantime rather than just, going through that roller coaster of emotions, watching the odds just whipsaw back and forth. So on the final, it even happens on the final day. Like I said, I think I backed him at 1.8. And, my strategy, whenever I back someone, whenever I've decided someone's going to win, I just trade the movement on the other players to either reduce my liability or increase my profits. So I backed him at 1.8. He was cruising along, and then he goes and does a 3-putt from 10 foot. I think the odds went and skyrocketed up to 5-1. Thankfully, by that point, I had reduced my liability significantly. So it was almost a free roll from there. With hindsight, I should have gone on for more money because he went on to win. But that's golf. And, like I said, there's really no space for riding out losses in golf, especially if you're trading on the final day, because trading on the first 3 days, markets are so rigid and they're just not liquid enough to trade. That's why I only trade on the 4th day. Other than that, the week as a whole has been pretty solid. At the time of recording, I'm around $1,000 up for the week, which is slightly above average by Friday for me. So it's easy to get complacent by now, but there's some decent action on across the weekend. So really going to stay in the zone through till Sunday. And we'll probably take Monday off. So should hopefully end the week around the 1.5K mark, which is above average for me. So my schedule is I'm going to trade Australian racing tomorrow morning, followed by UK racing in the afternoon, and might have a dabble with the PSL and the Under-19 Cricket World Cup, and finally try and close the week with a few nice trades on the golf, and then sit back and enjoy the Australian Open final in the tennis, which I'm hoping Nadal wins. I've always been a Nadal fan, and this in all likelihood will be his best chance to win. another Australian Open, depending on the Djokovic situation. But he's really going to have his hands full with Medvedev, who I imagine will be the favourite going in. I haven't checked the odds, but what a meltdown he had today. It was absolutely hilarious. I mean, Kyrgios arguably has the most outrageous on-court antics, but the way he was tearing into the umpire after the second set today was absolutely hilarious. Things with him and Tsitsipas, they already got their own beef going on, so tensions were heightened as it is. So, the fact that the umpire wasn't calling out Tsitsipas whenever he was speaking with his corner between every point really, really rubbed him the wrong way, and he was absolutely laying into the umpire after the second set. You guys got to check that out. It was funny because it just seems so out of character. With Kyrgios, it's kind of, you get what you see. The guy's already brash, quite cocky, so it's kind of, you expect that from him. But the way Medvedev carries himself, he's quite, reserved and, quite a friendly character. So to see him just absolutely lose it the way he did was so funny. You guys have got to watch that. But, really going to enjoy that. But, yeah, busy weekend ahead with the racing. As you guys know, I don't really like trading racing this time of the year. January and February, there's not a lot of prize money on offer. The weather's bad. But I don't want any rust setting in before Cheltenham. So and racing's a nice little earner for me. It's consistent, steady money. So gonna get cracking with that over the next couple months, and hopefully end this weekend as I started it. So gonna wrap this up here. Hopefully I've given you guys a bit of insight as to what markets I'm really keen on outside of sports trading, and hopefully it makes you make some informed decisions, even if you don't want to get involved in gaming, crypto, whatever it is you get involved in, whether it's the stock market, crypto market, commodities, whatever it is, just have a niche or two max and know them inside out. That's all you need to do. Stop trying to capture every move. It's not going to work. Unless you've got a team, you're not going to capture every move in every sector. Just focus on one or two things. That's all you need to do. I've already decided what my niches are and I've given the reasons why. And that's how I'm going to approach things moving forward. Nothing else really interests me other than that. But yeah, going to wrap this up here. So I'll see you guys next week. If you made it to the end, then thanks for joining. I'll see you soon.